U.S. Treasury yields edged higher in Monday morning trading, extending advances from last week, which gave them the sharpest weekly rise in years. Traders are looking ahead to economic updates later in the week, including the important consumer price index and a reading on U.S. retail sales. Ahead of that data, starting on Tuesday, investors will be watching the confirmation hearing of Federal Reserve Chairman Jerome Powell, followed by one for Lael Brainerd, the Fed governor who has been nominated to become the central bank's number 2 after Vice Chairman Richard Clarida steps down. What are yields doing? The 10-year Treasury note TMUBMUST 10Y, 1.803% yields 1.799%, compared with 1.769% at 3 p.m. Eastern Time. Yields and debt prices move opposite each other. The 2-year Treasury note rate TMUBMUST 02Y, 0.886% was at 0.882%, slightly up versus 0.868%. The 30-year Treasury bond TMUBMUST 30Y, 2.139% yields 2.142%, up from 2.116% on Friday afternoon. On Friday, the 10-year posted its biggest weekly gain since the period that ended September 13, 2019. Meanwhile, the 30-year notched its largest weekly gain since June 5, 2020, and the 2-year logged its largest weekly gain since October 11, 2019. What's driving the market? The Senate confirmation hearings for the number 1 and 2 posts at the Fed come amid a period of rising yields that have kicked off 2022, pushing the 10-year benchmark on Friday to around the highest rate in nearly 2 years. Powell's nomination hearing for a second term as Fed boss is scheduled for 10 a.m. Eastern Time Tuesday, while Brainerd's is due to take place at the same time on Thursday. Neither are expected to be challenged, despite pushback from some Democrats who wanted someone tougher on bank regulations and climate change at the helm of the bank. However, the policymakers' commentary on the state of the economy and the strategy of combating a surge in inflation will be closely watched by investors. The prospects of higher inflation and tighter Fed policy to address it have been underpinning the recent bounce in rates, contributing added significance to reports on elevated pricing pressures in recent weeks. Sign up for our Market Watch newsletters here. The closely watched Consumer Price Index reading is due at 8:30 a.m. Eastern Time on Wednesday, and is expected to show a rise of more than 7% from a year earlier, for the first time since 1982. The Producer Price Index is slated for 8:30 a.m. Thursday. On Friday, December's jobs report showed only 199,000 new jobs were created, significantly below the 422,000 gain expected by economists surveyed by the Wall Street Journal. The unemployment rate, however, fell to 3.9%, a pandemic low, from 4.2%. Read, Jekyll and Hyde U.S. jobs report not as ugly as it looks. What strategists are saying: look for another upward ratchet if December core CPI arrives higher than 0.5% on Wednesday morning. 2 things to consider before revising economic and market thinking for the entire year, however, wrote Jim Vogel, Executive Vice President at FHN Financial, in a Monday research note. First, 2022 headlines are incremental and not pivotal. The pivot was 6 weeks ago. Second, last week's flows pushed yields 20-25 BP higher without the volume that accompanies a major turn.